have got to go up. They're going to go way up in 2025, and we're only 2 weeks into the year. This is a big news. All prices are going up. So Wall Street is oblivious. These are leading indicators. If you remember, commodity prices really started to boom in the second half.
Inflation is back, louder and more dangerous than ever. In this eye-opening video, Peter Schiff unravels the so-called good news about inflation numbers and reveals the shocking truth Wall Street is ignoring. With commodity prices surging, oil on a path to $100 a barrel, and global inflation trends spiraling out of control, are we headed for another financial storm? Stick around as Peter exposes why the Fed's narrative is crumbling and what this all means for your financial future.
We had a rally today, which sparked a rally in the stock market because the government released what was, purported to be good news on inflation, right? We got a benign inflation report. We got a report that was better than expected. And by better, I mean lower, right? We got less inflation than was expected. And this is what ignited the boom. We had a big increase in the probability that we're going to get, a March rate cut now that we got this good news on inflation. Well, what was the good news on inflation? Because the expectation, and this is the December number, so it is the final number of 2024, and the estimate was for an increase of 0.3, and we got an increase of 0.4. What's good news about that? 0.4 is higher than 0.3. Now, the range of estimates was anywhere from 0.2 to 0.4. So it wasn't above the highest estimate, but it was the highest estimate, and it was higher than the previous month. And I think more significantly, if you take 0.4, which is 1 month, and you annualize that, let's say the next 12 months are the same as the report we just got. That's 5% inflation. 5%. That's a big number. That's more than double the Fed's 2% target. So how are we celebrating? Why did Wall Street look at what is a bad number and somehow decide that it was a good number and have a big rally party? Well, it's because the core number, right? And before I get to the core, let's talk about the year over year CPI, which was up 2.9%. That is 0.2 tenths hotter than the year over year from November. So we're moving in the wrong direction. Now, yes, the expectation was 2.9, and we got 2.9, but 2.9 is a long way from 2. Remember, when inflation was below 2, and the Fed was like, oh my God, this is an emergency, we're below target, we need 0% interest rates, we need to do quantitative easing, we really need to get inflation higher. It was like 1.5, 1.6, 1.7, and the Fed was like, that's not enough. We need to get to 2. Well, we were a lot closer to 2 then from the downside than we are now from the upside. So why isn't the Fed equally as vigilant when we're 0.9 away from 2? We're 2.9, right? I don't even know if we ever got as low as 1.1, right? So we're at 2.9. We're almost a full percentage point away from the target. Why aren't they being as aggressive to get inflation down as they were to get inflation up? It just shows you how disingenuous this whole thing is. They're actually cutting rates, when inflation is 2.9, and it's heading in the wrong direction. But, more significantly, forget about what the government claims is happening to prices. I talked about this on the last podcast. Look at commodity prices. Look at the CRB. In 2024, the CRB was up 17%. Does that sound like a year of low inflation when commodity prices as a group were up 17% in the year? And most of those gains happened in the last quarter. In fact, over the last 4 months, which includes the last 2 weeks, which is the first 2 weeks of 2025, the CRB is up 21%. This is a boom in commodity prices. We're up 5.5% so far in 2025, and we're only 2 weeks into the year. This is a big move. Oil prices closed today above $80 a barrel. We were up almost 4%, right? Wall Street is celebrating low inflation. At the same time, oil prices are surging by 4%. And that's despite the fact that we got a ceasefire in the Middle East, right? That should have brought oil prices down, but they went up. So oil is going to be booming. I think we're going to be back over 100, maybe by the end of the first quarter. The CRB index was up 1.6% today. It's at a 17-year high. The last time commodity prices were this high was 2008, before the financial crisis. And it took the financial crisis to bring prices down. But the main reason that the CRB is still about 20% below its record high from 2008 is because oil was over $140 a barrel back then. It's only $80 now. Oil's cheap, but it's not going to stay cheap. All prices are going up. So Wall Street is oblivious. These are leading indicators. If you remember, commodity prices really started to boom in the second half of 2020. And I was talking about that on this podcast constantly, how we were going to have a big move up in inflation. Just look at commodity prices. And that's when the Fed was not worried about it at all. It still was worried that we didn't have enough inflation. And then even after we started to see these big jumps in the CPI in 2021, and the commodity prices kept going up, the Fed was saying it's transitory, don't worry about it. And I was saying it's not transitory. Look at commodity prices. They're a leading indicator. And the big increase that we have in commodity prices in 2024, that's not going to show up in the CPI until 2025, this year. So CPI was up 2.9% last year. Now we have soaring commodity prices. So what's the odds that the CPI is going to be up less in 2025 than it was in 2024 before we had this big run up in commodity prices? I don't know if you're paying attention to what's happened in some of these prices. I jotted these things down yesterday or before today's rally. But year over year, cocoa prices are up over 170%. 1 year, 170%. Coffee, 75%. Natural gas, 50%. Wheat, 45%. Sugar and oil, 40%. Soybeans and copper, 30%. Gold and silver up more than 25%. I mean, this is inflation. I looked at a chart of live cattle. Cattle's only up about 15% in the last year, but it's at an all-time record high. Look at that chart. I mean, cattle is going to stampede. I mean, one after another. Look at these commodities. These are incredible looking charts. And what's even more significant is that it's happening with a strong dollar, which is very rare. Normally, you get big moves in commodities when you have a weak dollar because commodities are priced in dollars. So what that means is that if you want to know what's happening to commodities in Europe, in Japan, in Canada, in Australia, in South America, you got to add at least another 4 or 5% to all these numbers. That's why I'm talking about inflation is going to be, running all over the world. In Japan, and I've been talking about the yield on the Japanese government bonds. Well, now the yield on the 10-year JGB is 1.25. We just broke 1%, a month ago, and now we're at 1.25. Look, we're going to be at 1.5. Then we're going to be at 2. And once we break 2, Katie, bar the door, right? Yields are going to spike in Japan because there's a big inflation problem. They just came out this before I did this show with their PPI numbers, and year over year producer prices in Japan are 3.8%. Their consumer prices are 3.4%. We're way above 2. Remember, the goal was to get inflation up to 2, and now it is way above 2, and it is heading a lot higher. In fact, if you look at the yield curve in Japan, the yield even on a 20-year Japanese government bond is 2%, and on a 30-year, it's 2.35. That's way below the inflation rate. The yields can't stay down here. Yields have got to go up. They're going to go way up.
The warning signs are everywhere. Soaring commodities, a Fed in denial, and inflation that's anything but under control. If this breakdown resonated with you, don't just watch, act. Like this video, subscribe to the channel, and hit the bell icon to stay ahead of the financial curve. Knowledge is power, and staying informed could be the key to protecting your wealth. Thanks for watching, and remember, real solutions come from real understanding.